Okay, there we go. Sorry about that. All right. Welcome to the Nadex Application and Strategy webinar series. My name is John Skelton with apexinvesting.com. As most of you have been with us here over the last few weeks for the month of March, we've been mainly focusing on the Nadex 20-minute binaries. And so we're kind of wrapping up the month of March tonight. Just going to do a quick overview of kind of what we've covered so far for the month as far as some of the ins and outs of binaries, ins and outs of the 20-minute binaries, and we've talked over the last couple weeks about range-bound strategies and breakout strategies. And then tonight we are going to be covering those again and adding in one more piece, which is trend trading the 20-minute binaries. So we're going to kind of do a quick review of what we've covered and add in that one piece as far as trend trading. Okay. Last week we covered the range bound and breakout. We also talked a lot about how binaries work, what's an out of the money binary, what's an at the money binary, what's an in the money binary. And we had a lot of requests for us to kind of review that tonight, and I'll review it very quickly tonight. But actually next week on next Monday's webinar, we're going to do a complete webinar specifically focused on choosing the right binary for your strategy. We'll be specifically covering in detail what is an out of the money, at the money, in the money, how they work, what's the best one to choose, why you'd want to choose a particular binary for your particular strategy. Okay, so that's kind of what we've got going on here. Let's just let's get rolling here. Let's see here. All right, let's get through our standard disclosures here. Trading futures, options, any financial instrument involves risk and may not be suitable for every investor. Apex recommends you seek independent advice before making any decisions. The information and strategies contained herein are property of Apex Investing. And again, futures and options do involve risk. Any trading decision you make is your sole responsibility. The information presented in this webinar is for informational purposes only and is not a solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. And past performance is not indicative of future results. So again, let's start off here with, most of you have a Nadex account already. Some of you have a live account. Some of you only have a demo account. Let's see here. We get a couple people saying they're having issues here, and everybody, we good coming through. If you have any troubles over here in the chat box, let me just repost this here. If you have any trouble hearing or seeing, you may want to log off and log back in. Otherwise, you can use this link right here and contact GoToWebinar. And if you're having issues with hearing us, they can give you a code to dial in. But best thing to do, just log out, log back in. If you have any trouble with doing that, go ahead and give them a call. So for those of you that don't have an account with Nadex just yet, hop over to nadex.com. And you can go right here to trading, go to demo trading platform. You can open up a demo account. Just takes a few minutes to do. All you have to do is select a username, give your first and last name, phone number, and email address. Within just a few moments, you get an email with a temporary password, and you can log right in to your demo account. Okay. What they will do is give you a demo account with $25,000 of funny money to play with, get a handle of the platform, start to learn binaries, how they work, how to trade them, how to use the platform. Once you get your email with your temporary password, you can log in, go up here to My Account, and you can go to Settings and Password. It'll let you change your password to whatever you'd like it to be. Okay. But the demo account, definitely recommend getting a demo account if you don't have one already. Don't even wait till after this webinar, guys. Go ahead and hop on right now and just fill that out. That way here in just a couple of minutes you can have a demo account. Might help you follow along with us, kind of see what we're looking at here. You can kind of follow with some of the examples that you might see as well. But definitely, as you're learning to trade binaries, testing out your systems and strategies, the demo account's the place to do that. You don't want to test something new or play with something you're not familiar with, or trade live money on a strategy that has not been mastered just yet. Okay, so hop on over to nadex.com and open that demo account right away here. And then, where can you get free education? What you want to do there is hop on over to our website, apexinvesting.com. As soon as you get there, you can go right here, join free now. This will allow you to create a username and password. It's free to join. As a free member, you get access to the site, to literally hundreds of hours of education. Once you get your username and password, you can log right into the site here. And give me a second here. Helps if I spell it right, doesn't it? Once you get onto the Apex website here, this will open up a whole world of information here for you. You can go under here to questions, go to active Apex investing courses. You have free access to all these trading courses here. 5-minute binaries, our elite trend catchers, how to set up NinjaTrader and data feeds. We show you how to get charting systems and data feeds for free, so you can use some of the charts. You go through all of our training courses for free. You can go right over here to the education tab of the website and go down here to Nadex tutorials, Nadex tutorial videos. We've got getting started with Nadex, a bunch of videos there, a whole series of Nadex platform videos, how to use the platform, how to customize the platform and the view, entering and exiting orders, Nadex spreads, and Nadex binaries. Okay, all kind of good information here about Nadex binaries, how to trade them, strategies, in the money, out of the monies, all kind of information here. And that's all free to you as a free member. Okay, right here under the questions tab, the second option down is Trading Questions Forum. You can go here to the forum. Let me expand back out for you. And you'll see all the different options in here. We have this forum broken down from S1 to S12, sanity, steward, schedule, select, all kind of information about money management, risk management, trading psychology. We've got a strategy section about different strategies, systems. This will walk you through all the different systems that we use here to trade Nadex binaries, Nadex spreads. And then right here under the general trading forum, if you open this up, just go down right here. It'll say Apex webinars. You can also see everything's broken down here. You can watch Nadex spreads webinar, Nadex binary webinars, platforms, and then right here, newest webinars. Okay, a couple of you have asked, hey, is this webinar being recorded? Yes, it's being recorded. This is where it will be posted, either later tonight or by tomorrow. You can also go back, for those of you that haven't been with us, that want to kind of catch up on some of the items we've covered on Monday nights over the last month. You can go right here and you'll see all of our last webinars. Last Monday, we talked about Nadex binary butterflies and strangles. Monday before that, short-term binary strategies. And you can just go back and you'll see all these Monday webinars here, all the way back to the beginning of the month of Binaries 101, which was a complete webinar just on the basics of a binary. What is a binary? How does it work? Okay, so again, make sure you hop on, get a free Nadex demo account. You can go to apexinvesting.com, sign up, get for free, get a username and password, have access to all of our past webinars and all of the free education. Okay, so let's get moving forward here. As far as our agenda tonight, we are going to be covering some more information about the 20-minute binaries with Nadex. And we're going to do just a quick review here. Give me just 1 second here. I got too many things open, it looks like. So tonight, Nadex 20-minute binaries, directional trading. We're going to talk about what are 20-minute binaries, what can I trade them on, how to trend trade them, and choosing the right binaries. Okay, so we're not going to cover in depth the basics of binaries tonight. I kind of showed you where you can get some of that information. We're going to go through it real quickly, but not in depth. Okay, so some of you are very familiar with binaries, have been trading them for a while, but some of you here on the webinar are brand new. So we're just going to run through real quick just so we can put this all together here. Okay, basically with a binary, you've got a binary is strictly a yes or no, true or false statement. Okay, will the event happen? Will the statement be true or will it be false? Okay, what that means is if I'm buying a binary, I'm saying that the statement will be true, the price will be over a certain amount by a certain time. If I'm selling a binary, I'm saying that statement will be false. Okay, so let's just run through. This is going to be a very quick overview here. For buying, if you're long on a binary, if you're buying a binary for $25, okay, at expiration a binary is either worth 0 or 100 at expiration. So if I'm buying a binary for $25, my maximum risk is the $25 that I use to buy that binary. My maximum reward would be $75. So if I purchase a binary for 25 bucks, it expires in the money, it's worth $100. So my maximum risk is 25, maximum reward is 75. The amount I buy the binary for is my amount at risk. That risk amount is the money I'm putting up in order to place that trade. Okay, so let's look at another example here. If I buy a binary for $75, my maximum risk is 75 because that's the amount I'm putting up to buy it for. My maximum reward is 25. Basically, my reward is the difference of $100 compared to where I bought the binary. Okay, on a short position, it's the opposite. Again, it's worth 0 or 100 at expiration. So if I sell a binary for $75, my maximum risk is $25. My maximum reward would be $75. So when you're selling a binary, the amount you sell the binary for is the maximum amount you can make. All right, the difference between what you sell the binary for and $100 is the amount at risk. So let's look at another example on a short here at 50 bucks. Okay, again, worth 0 or 100 at expiration. If I sell for 50, maximum risk is 50, maximum reward is 50. Okay, and when you're on the Nadex platform and you're entering a order, all this information is right there for you. If you're ever confused about buying and selling and what's my maximum risk and maximum reward, okay, for this particular binary contract here, all right, this is saying that the euro dollar will be greater than 1.3960 at 3 p.m. as an example. So I can buy it for 85 or I can sell it for 79. So if I think that the market will be above 1.3960 by 3 p.m., then I'm saying yes, I think that will happen. I think that event will happen. I think this is a true statement, so I'm going to buy. Okay, so if I'm going to buy this particular contract right here, buy it, I'm going to buy one contract for 85 bucks. It shows me right here on the platform before I ever place this order what my maximum profit is and what my maximum loss is. All right, just like we covered, if I'm buying it, my maximum risk is what I buy it for. My maximum profit is the difference of where I bought it compared to $100. Okay, so again, if I'm buying this, I can buy it for 85. My risk is 85. My reward is 15. If I were to sell it, I'm selling it for 79. My risk would be 21, and my maximum reward would be the 79 that I sold it for. Okay, and here's that example again. Like I said, if you're ever confused on that, it's right there in front of you before you ever place your order. If I was to sell this particular contract here, meaning euro dollar to be greater than 1.3960 by 3 p.m., if I say no, I don't believe that's going to happen, My strategy, my system, my indicators on my chart are telling me something different. I think it will be lower than that. Then I can sell this, saying that statement will be false. This example here, if I were to sell this binary for $82, so I'm selling it, one contract for 82, tells me right here, max profit is 82, max loss is 18. It'll tell me that before I ever place the order. Okay, now again, these numbers here, like I said, a binary at expiration is worth 0 or 100. Now, with Nadex, you can exit early. You don't have to hold a binary till expiration. You can exit early, whether it's going in your direction and you're profitable and you want to get out early and, let's say you're scalping it, or if it's going against you and you want to get out early to limit your risk. You don't have to hold it until max loss. Okay, so binaries with Nadex. What can I trade Nadex binaries on? I can trade them on stock index futures, spot Forex, commodity futures, and economic events. Okay, with Nadex, with the excuse me, with Nadex on the 4 U.S. indices. They offer binaries on the 4 U.S. indices, European indices on the FTSE and the Germany DAX, and on the Asian market with the Japan, the Nikkei, and recently have added in the China 50 as well. Okay, we've also got 10 different Forex pairs we can trade Nadex binaries on. You can trade Nadex binaries pretty much 23 hours a day. They've got weekly, daily, intraday, 20-minute, and 5-minute expiration times on their binaries. Okay, we covered this last week, guys, and we're going to cover this in depth next week, a full webinar dedicated to this. But several of you have asked for us to cover this just briefly again. You said it really helped you put the pieces together. You might have heard the terms out of the money, at the money, or in the money. Okay, what are those? How are binaries priced? What is time decay? What is the difference of all these different binaries? Well, if you've traded options before, you're familiar with those terms, in the money and out of the money. Binaries are unique in the fact that in the money or out of the money depends on whether you're long or short. Okay, so a couple of you asked me to pull up the platform here and just kind of review like we did last week, just real quick. I'm not going to spend a whole lot of time on this, but I had a question on this, so we're going to cover it real quick here. Okay, what we're going to do is we're going to pull up, let's just pull up Aussie dollar, for example. And this is a demo account. Pull up Aussie dollar expiring here at about 8 o'clock. Okay, all right. This is the list of all of the contracts, the binary contracts that Nadex is offering right now for the 8 o'clock Eastern Time expiration. All right, all expiration times you see quoted on Nadex are quoted in Eastern Time. Right here, this indicative index, this is where the market is right now. Okay, that's where the indicative is right now. So right now it's at 76.54. Okay, well, you see right, actually let me switch over to, let's look at euro dollar real quick. Actually, let me find something a little closer here. Let's see here, 83.15. Okay, so 0831. Okay, so right here, this indicative is at 0830. Okay, and you see it changing here every couple seconds as the market's moving. Okay, well, right here we've got a contract for 0833. Okay, and now you see it's moving quite a bit. Now it's at 0825. So see this one right here? This contract is at 0825, right? And see where it's priced? Right around 50 bucks. You've got your bid and offer there. That's what you call an at the money binary, meaning if the strike price listed on the binary right here is approximately right where the market is currently located, then that's at the money because it's at the current market level. Okay? It's not above it, it's not below it, it's right at the current market level. and that binary will be priced approximately around 50 bucks. You know, give and take for your bid offer. Okay? Because basically, right now, that's saying that the euro dollar will expire above 1.0825 by 8 p.m. Well, if it's at 0825 right now, it's kind of a 50-50 chance. It might or it might not, right? So an at the money binary means it's at the strike price, and it's going to be priced approximately around 50 bucks. Okay, because it's about a 50-50 chance there. You can see as we're watching it here, it's now gone up to 0827. All right, and now the price has gone up. So what does that mean? That's now what's called an in the money binary, because this statement is already true right now, isn't it? For it to be above 0825, well, right now it's at 0827. So it's already above the strike price. So it's already in the money. Does that make sense? Everybody follow me there? If the market were to stay above, it would expire. At expiration, it would expire in the money. So right now the statement's already true. All right, and that's why it'd be priced a little bit higher. That's called an in the money binary. Now, what about this one right here? This is saying that the euro dollar will be above 1.0833. Right now it's at 0826. So it's not quite at 833 yet, is it? So it's not above the current market, so it's not in the money. It's not at the current market, so it's not at the money. It's below the current market. So it's out of the money. Everybody follow me there? If I were to buy this contract right now and the market does not go up, this will expire out of the money. Okay? Because it's not at the current price, at the strike price, or above the strike price. Okay? So that's just a quick walkthrough of in the money, at the money, and out of the money. All right? And like we talked about last week, if I'm going to go for an in the money binary, this one right here, for example, I'm saying the market to be above 0821. Right now it's at 0823. So if the market stayed flat exactly where it is right now at expiration, then this contract will expire in the money. Or the market can go up and it would still expire in the money, or it could go down just a little bit against us, but not all the way to our strike price, and still be in the money. So for in the money binaries, the market can do three different things. It can stay flat, go up, or come down just a little bit against us and still expire in the money. For an out of the money binary, the market has to move, right? The market has to move up or down, depending on what direction we're going, in order to be profitable at expiration. So, like we covered last week, out of the monies require movement. For you to be profitable on out of the money binary, you have to have expected movement in the market. Okay? In the money binaries, you don't have to have movement as long as it stays above your strike price. Okay? So, hope that answers a couple questions there. Again, we're going to cover that in much greater detail next week. If you want to join us, and make sure that you are on next week's webinar, we're going to talk about those in depth and time decay and how a price of a binary works. The closer you get to expiration, the more volatile a price can be. This quick example here, I'm just reviewing this for some of you that are playing catch up, and to make sure you understand it here in a second when we jump into a couple of these strategies, because it's very important to know in the money, out of the money, and at the money for some of these strategies. This example here, this contract of the euro dollar being above 1.2540 at 3 p.m. Well, this green line here is 1.2540. Okay, so if the market was right here, and I can sell this, or I can sell this for 54 or buy it for 58. So say I buy it for 58, but then the market comes down here. Well, now it's only worth 42.46 because it's below the strike. It's out of the money, right? As we get closer to expiration, again, at expiration it has to be worth 0 or 100. So the price can start to, the price change, the change in price and change in value can speed up the closer we get to expiration. So closer we get to expiration, we're still out of the money. It's gone from 58, 46 down to 38, right? It's what's called time decay. The closer we get to expiration, if we're out of the money, it's going to go down in value. But then look here, the market pops up, pops above our strike price. Now it's priced at 72 or 76. So at this point, I've got two different options. Let's say I bought it for 58. Now we're getting close to expiration. I could sell it back for 72 for a $14 profit. Or I can hold it to expiration to get the full $100. Okay? Now, we normally don't in any of our strategies recommend holding to expiration. And why is that? Well, right here, look what happens. Right here, you're profitable when the market popped back up. But what happens when the market shoots down underneath your strike price? Now it's worth 22 or 26. Smaller amount than it's been this whole time. Why is that? It's because we're almost at expiration. And again, at expiration, it's got to be either 0 or 100. So the closer you get to expiration, the quicker in value, up or down, your contract can move. This particular instance, it popped back up and was worth $100. Okay? That's just a quick overview there of time decay for you. So, 20-minute binaries. What are they? What can I trade them on? If you go over here to the Nadex website, and you go right here to Markets, Stock Indices. Someone asked me a little while ago here, hey, can we do a live 20-minute trade on this webinar? Well, unfortunately we can't because there are no 20-minute binaries right now. Okay? 20-minute binaries are offered during the daytime, and they are offered on the 4 U.S. indices, the Wall Street 30, the U.S. 500, the U.S. Tech 100, and the Small Caps 2000. Okay? You can see here on the Wall Street 30, it shows you the expiration times. They start at 10 a.m. is the first expiration, and down to 4 p.m. Eastern Time. So the earliest you can get into a 20-minute binary contract is at 9:40 a.m. and it will expire at 10 a.m. Okay, and that's the same for all 4 U.S. indices here. Okay, and this will show you basically earlier mornings, the 10 to 11:20 expiration times. For example, on the US 500, strike width is 1, meaning the strikes are 1 point apart. Okay? During the lunchtime hours here, they're only 0.7 apart. They're closer strikes. All right? And what do I mean by strikes? I mean this right here. The example we're just looking at, see this? 1.0837, 1.0841. Those are strikes. Okay? So on the US indices for the 20-minute binaries, you can see those right here. On ES, it's 1 point, but during the lunchtime, it's 0.7. Okay? US Tech, it's normally 3, but during the lunchtime, it's 2. Now, why would that be? Why would you think that might be that during the lunchtime hours, they might have closer strikes? Well, again, because it's lunchtime and volume. Yes, Eric, exactly. A lot of times, not every day, some days the market's moving like crazy and trending and going all over the place. But a lot of days you'll see that when the markets open up in the morning, things start to take off. But then you also see around lunchtime that it slows down. Here's a perfect example here of lunchtime chop or lunchtime slowdown, where you can see in the mornings the markets were moving up and down, and then look here, from about noon till almost 3 o'clock, just kind of slow there. All right. Now that doesn't happen every day, as you know. Some days it's going crazy. But because there's normally less volume and less movement during those lunchtime hours, the strikes are closer. okay, that actually is in your favor, in your benefit, because the market does not have to move as much for you to have your potential of being profitable during those slower times. Okay, so that is the biggest reason for the difference in the strike widths. Okay, now someone asks, is it less risky? Well, you know, it's hard to say. You know, risk is what I consider risk. You may not. Risk is determined, you know, first of all, what strategy or system you're using, which, you know, kind of risk management are you using, money management are you using, your account size. You know, since the strikes are closer together, it does not require as much movement for you to potentially be profitable. But again, at, you know, during those lunchtime hours, you may get no movement. You know, you may get very little movement. You may get a lot of movement. All right, so I can't necessarily say that it's less risky. I can just say that the strikes are closer in order to help match up to that slower time there. Okay. Let's see here. Yes, somebody asked for this particular chart. Would an iron butterfly be suitable? Eric, absolutely. Okay, and we're actually going to cover iron butterflies here again in a minute. But yes, during that type of situation there, where you've got some stuff going on in the morning, and then all of a sudden it starts chopping out. You're not seeing it break through these ranges. You're seeing volume very low. That is a perfect time to look at doing iron butterflies. Okay, and we're going to cover that here in just a second. We have some previous videos I can show you where to go that are really going to jump into detail on iron butterflies, but we're going to kind of breeze through and cover them here in just a second. Actually, let's do it right now. Iron butterflies is what we call a range bound strategy. Let's look back at this chart. You see these squares on my chart? Okay, those squares is what we call our expected range indicator. Okay, and they are time-based every 20 minutes, meaning at the end of each one of these boxes, end of each one of these squares, is the end of a 20-minute period, meaning the expiration time of a 20-minute binary. So the expected range gives us what the expected movement of the market would be. Looking back historically and taking all into account, normally on these particular days, this particular time of the day, the market normally stays within those ranges. Okay, so if I see that the market is range bound, meaning it's staying in between these ranges, it's not breaking out of here, and like see right here where it broke out of the range, took off trending later in the day. If I see that it's staying in between these ranges, well, what I can look at doing is trying to find a strategy of, well, hey, this market's not really moving. I don't know if I want to go with a directional strategy that requires move. How can I take advantage of this slow range bound day? Okay, so different days are different. Some days are range bound, just like we saw. Market's flat, not moving. Some days the market's going crazy, up and down, choppy. You're not sure which way it's going, but it's just going back and forth. Then some days are trending days, where it's a very clear uptrend or downtrend. And you have to have different strategies to take advantage of each different type of day, each different market condition. There's no single strategy or system that'll work 100% of the time in all market conditions. Okay, you've got to have different plays in your book here. So let's talk first of all. We've covered this before. We're just going to breeze through it again. Flat markets, non-trending. Okay, so if the market's not trending and it's flat, remember we talked about an out of the money, where the out of the money is not quite at the strike price yet. It would have to move. There would have to be movement in the market to be potentially profitable on that binary. Well, if I have a flat non-trending day where nothing's going on, it's probably not the smartest idea to use an out of the money strategy, is it? Because any out of the money strategy requires movement. Now, do you remember What type of binary did not require movement? In the money binaries, right? Binaries that were already in the money, a statement that was already true. So how do we determine if a market is range bound? People say, hey, I'm going to get up and trade today. I don't know if it's going to be a trending day. I don't know if it's going to be a choppy day. How do I know? How do I know what type of system, which one of my strategies that I have to implement today? Well, that is where we look at volume, our expected ranges, deviation levels, news, and so on. So what is a butterfly? Butterfly is where we're actually buying and selling a binary at the same exact time for the same exact time period. We're not just going one way or the other. We're actually buying and selling at the same time. We're looking for it to expire anywhere in the middle. Okay, so what do I mean by that? Let's take a look here. Here's another chart, and you see we have the ranges on there, just like we talked about before. So if I'm seeing that the market is staying in between these ranges, see here, this is our expected volume indicator. We're going to talk a lot about this tonight. Volume is key. Volume is extremely important in pretty much every binary system that we use. If you can see this yellow line here, that yellow line indicates the expected volume for this time period. Okay? Historically, traditionally, what volume is for this day and time period. Okay? The blue shading shows the current actual volume. This example here, the blue shading went outside of the yellow line. That means volume exceeded expectations. You see here where it was under the line or barely at the line, and it's doing what was expected or less than expected. There's not as much movement. So if I'm seeing that volume is not exceeding, and I'm seeing that we're not blowing through these ranges, well, I'm not really sure what direction the market is going here. It's not really going anywhere. It's just flat. So how can I take advantage of that? Well, that's what we call an iron butterfly. Remember what happens. What are you saying when you sell a binary? When you sell a binary, you're saying the market will not go above that price, correct? If you buy a binary, you're saying it will expire above that price. So if the market's flat and just not moving, what if I was able to buy a binary down here and sell a binary right here? What I'm saying is, if I buy here, I'm saying the market will expire above this level. And you see it did. If I sell up here, I'm saying it will be below this level. And it was. So on flat days like this, what I'm looking to do is to buy and sell at the same time. And what I'm wanting to do is expire in the middle. And if that happens, I can be profitable on both sides. All right, with the basics of a binary, you're thinking it's a true or false statement, just simply yes or no. So I got to make a decision whether to buy it or sell it, and that's correct. With a butterfly strategy, you're looking to implement both. It'll be above this level here, but below this level here. And if I'm right and it expires in the middle, I can be profitable on both sides. Let's look at an example of that. On that particular example we just looked at there. If I was to buy this binary for $82.50 and I was to sell this binary here for $19.50, all right, so I bought the 2051 and I sold the 2055. So what I'm saying is it will expire above 2051, and here I'm saying it will expire below 2055. So if it does expire anywhere in the middle, I can be profitable on both sides. So this particular one here I bought for $82.50. If it expired at $100, then I'd make $17.50 on it. At the same time here, sold this one for $19.50. If it expired, I would make $19.50. So between the two, I could make $36, $37. You can see right here when I took the screenshot, they were both up about $12. So what you're looking to do there is, when you see that it's flat and range bound, you're looking to sell it in the money and buy and in the money, okay, and be profitable on both sides, okay. So that is, and again, we're covering this really quick. I'm getting some good feedback from some of you here that are saying you're very new and this is great. I'll show you at the end here where you can go and watch extended webinars that are specifically just teach more about the butterfly strategy, okay. So what is a strangle? Now we're going to move on. Strangle is pretty much the exact opposite, okay. Actually, one quick clarification here. Notice these are both in the money binaries that we're doing on the butterflies. Remember, in the money, the statement's already true, so the market doesn't have to move. The market can go up, stay flat, move against me just a little bit, but not to my strike, and I still can be profitable on both sides because I'm looking for lack of movement. I want it to stay flat and expire in the middle, okay? Got to keep that in mind. Butterfly is an in-the-money strategy, wanting it to stay in the middle, okay? Now, this is the opposite we're going to go to here, all right? This is what's called a strangle, all right? Let's take a quick look here. This is our Nadex binary scanner, okay, that we use. It's a tool we have over at Apex Investing. It's free to use, all right? This will show you all of the strikes here. So let's just look at a quick example. See this one right here? That's priced around 50 bucks. Okay, and it's this strike right here, 17,893. So like we talked about earlier, since that's priced right around 50 bucks, that means the market is right around 17,893, correct? That's why it's 50 bucks. All right? So this is called what? An at the money binary, because it's at the money. Correct? Now, let's look up here. See this binary that's priced for about $18? Well, that strike price is 17,914. Yes, Sandra, exactly. That one here at 50 bucks, at the money. This one up here, priced for about 18 bucks, is 17,914. All right? So it's about 20 something points off from this one. So that's an out of the money binary, correct? Meaning the market's down here. It's not up here yet. So if we were to buy this one saying this statement will be true, the market will expire above this, well, the market has to move to get up there to that, right? What happens if the market moves and gets up here to about 17,914? Say the market went up and it's now at this level. What would this binary be priced at if the market moved up there? Exactly, around 50 bucks because it's at the money. So if I bought this one for 18 bucks, the market happened to move up there, then it would become worth about 50 bucks. All right, we can see that easily here on this price ladder, right? So let's look at the opposite. Let's look at this one down here. See, this one's priced at $86 on the sell side. Okay, so that's down here at 17,865. So let's say the market's here and it went down to this level. And this one now became the at the money binary. Well, it'd be worth about what? 50 bucks, right? Remember, when I'm selling, I want it to go down. So if I sell for 86, I can buy it back for around 50 and I'm profitable 36 bucks. Okay, just remember it's the opposite when you're buying and selling. So that makes sense to everybody. The market's here in the middle. If it went up here, I could be profitable on this side of the money. If it came down here, I could be profitable on this side of the money, potentially. So let's say that the market's moving like crazy, but it's not really clear what direction it's going. It's going up and down. It's choppy. I'm not sure which way it's going. All right, let's take a look here. What a strangle is we're going to do an out of the money on both sides. All right, it's low risk. There's no stop needed. We're looking for a 1-to-1 risk-reward ratio. They're very quick trades. Let's look at a chart here, okay? And we're going to look at this chart right here. So on this chart right here, it looks a little different from the chart we were looking at earlier, right? See, the market's moving up and down between these ranges. It's not just staying flat. But also, remember I said the big key here? Look at the expected volume. It's breaking past that yellow line over and over again, isn't it? Okay, that means volume's higher than expected. The market's moving. Okay, it's moving quite a bit. So if I'm going into this range here, and I'm not sure which way the market's going, if I could have bought a binary up here for about $18, and I could have sold one down here for about $84, I've got $14 risk down here, and I've got $18 risk up here, right? So the market shoots up here. What happens to that binary that I bought for about 18 bucks? Well, it all of a sudden goes up in value, right? Remember? Because we were right here in the middle, and if it shot up, I bought this one for 18, it all of a sudden goes up in value. All right, now let's look here. Look at the next range. Market shoots way up, then it comes down. This next range shoots way down. So I'm not sure which way this is going, right? But I know it's moving. So I'm going to do an out of the money buy and an out of the money sell. Okay? So let's take a look here. Here's an example right here. All right, these are actual screenshots. So for this particular day, this was for the 120 expiration, okay, which is right here. So at the beginning of this 20-minute period, see, look, see the market had been moving, I had volume. So at the beginning of this 20-minute period, I bought for $15.50 and I sold for 86. All right, see this 42.87, that's up here. I bought it for 15 bucks. But I bought it right here when the market, that period opened. I bought up here for 18 bucks, and boom, the market went right up there. And now look what it's worth. Now it's at 70. So I'm profitable. I'm up $54 on that side, right? Now I sold down here. So at this point, this is worthless, all right, because the market didn't go down, it went up. So I risked $14 right here, right? Because when you're selling, your risk is the difference of where you sold and 100 bucks. So I risked $14 here, and I risked $15 here. So I'm up $54 in profit on this one because I bought it for 15, the market shot up there, and now it's worth 70. So I'm up 54 in profit, but I have to take out the 14 that I risked on the other side. So I'm up about 40 bucks. Okay? So I risked about 30 and made 40. Okay? Eric asks, so in a strangle, do you scalp it? I personally do, yes. Some people say, oh, I'll do a strangle, hold it to expiration. Well, you know what? You know what can happen? It's exactly right here. Check this out, Eric. So right here, I bought, as soon as this 20-minute period opened, I bought up here and I sold down here. The market shot up. Okay, so I bought this for 15, the market shot up, it's now worth 70. And that's where I took this screenshot. Right now, I'd be out. I'd close it out right there for 40 bucks profit. You know why? Because look what happened. Then it came back down and expired what? Right in the middle. So if I'd have held it to expiration and expired in the middle, both sides of this would be worthless. That makes sense? Look at the before here. Well, you know, if I got in right here and bought up here and sold down here, that one I might have made some money on the sell side. Okay, but you know, sometimes you can hold on to them and they'll keep going, and you might be able to get out and make the full profit on one side. But so many times, like this example here, it comes down, comes back up. You want to place your order. You want to set your take profits. You want a one-to-one risk reward there. What I mean by that is, like on this one here, I bought it for 15. Now it's worth 70. So I've covered my risk on both sides. Okay, plus doubled that. All right. So if I'm going to risk 30, I want to be able to make at least 30. Does that make sense? So this here was on this particular day for the 1:20 p.m. expiration. Now let's look at the next one at 1:40 expiration. Okay, Same thing here. We've got some exceeding volume going on. We've got movement. So this period opened up right here for the 140 expiration, which is this line right here. I got in, I bought up here for 25, I sold down here for 83. So I got 25 risk on the top, 17 risk on the bottom. Look what happened. Boom, boom, market went down. So on this particular timestamp here, we're up $64 in profit on the sell side. The buy side is worthless. So we lost this 25. Okay. On this strategy, let's back up. The butterfly strategy we looked at earlier for in the money binaries, where we want it to expire in the middle, we're looking to profit on both sides. But on this strangle strategy, we're expecting to lose on one side. We're only looking to win on one. Now there's times where the market can come back and you might be profitable on both. But we're going into it with the expectation of most likely losing on one side to make it all up on the other side. And that's why we keep the risk low. Risk 25 bucks on one side, 17 on the other. This side here that I risked 17 bucks on is now up $64 in profit. I got to take out this loss of 25 bucks here, so I'm up about 40 bucks, which was about what I risked. Okay. Let's see here. So would you have the sell open into expiration on that last one? Are you talking about this one here? Yes, exactly. So let's say, for example, right here, remember I bought up here and sold down here. Market shot up. So this one that I bought is up 54 bucks. I'm going to close out of that and take my profit. But yeah, this one's still open. So what could have happened had it come back down further, I might have been able to get out of that with a little something. All right. Or on this example, that's the 140 example. Let's look at some here. Sometimes you might have one that comes way down like this, and you can be profitable on that side, get out of it, and it might come back up. So yes, the losings, once you close out your profitable side, you can leave the other side on, and it's possible that it could come back in your favor, and you can potentially profit on both sides. But again, we go into this strategy expecting to only profit on one side. That's why we keep our risk low. Okay. Larry asked, does the cost of buying and selling each contract come out of your profit you just made? Yes. With Nadex, you're looking at 90 cents per contract on each side. So if I bought a contract, I'd pay 90-cent commission, and then if that contract expired profitable or I sold out of it profitable, it would be another 90 cents. Okay. Now, if I sold a contract on the other side, it'd be a 90-cent commission. But then if it expired out of the money, it was not profitable, then there's no back-end fee. So yes, what you're looking at here is 90 cents times 3. So out of these profits I'm showing you here, take out $2.70 out of the $45 profits I'm showing you. Okay. So again, this is the 220 expiration here. Easy. Look at this. See those blue bars going crazy, blowing through that expected volume? That means we've got some volatility going on. We've got some movement going on. The market's moving. But we've seen it just kind of choppy up and down. It's not clear that it's moving one particular direction. It's not flying, trending straight up. Okay. So what do we do here? This particular, what is this, 220 expiration, that's right here at this line. Hopped in right here for $20 risk on one side, 21 on the other. You can see all this volume as the market moved down. Got out of it right there. All right, we're up $52. Okay. All right, Larry's asking about these charts. These are charts that we use over at Apex, and these are indicators of Apex. Okay, I'll show you where you can go to get some more information on these charts here. Okay. So how do you close and take your profit, or when do you know when to take your profit? Okay, here's how I know. Look at the example on the screen here. I sold this one for $79. So what is my risk? $21, right? Okay, I bought this one for $20.50. So what's my risk on that side? Well, $20.50. So total here I've got about $40 of risk, correct? So if I know that I'm risking 40 and I want to keep a 1-to-1 risk reward ratio. Now what does that mean? What does that term mean? That means if I'm going to risk 40, do I want to go in every 20 minutes and risk losing 40 bucks to make 10 bucks? That's probably not very smart, right? Because what happens if I win 4 in a row? Man, I just think I'm the trading king, right? Boom, 1-1, there's 10 bucks. Boom, there's another one, there's 10 bucks. Boom, 10 bucks. Boom, 10 bucks. Then what happens to the next one? I lost 40. So guess what? One loss wiped out all those 4 wins, correct? So that's probably not a great trading strategy there. All right? Now, there's different types of strategies out there. You can have strategies that are a 1-to-1 ratio, meaning if I'm going to risk 40, I want to be able to make 40. And I want to have a greater than 50% win rate, because then I'm profitable, right? Some people like strategies of, well, you know, I'll risk 40 to make 20, but I have a 85% win rate. Okay, great. You know, other people say, hey, I lose 80% of the time, but my particular strategy, those 20% of the time when I win, I make like a 1-to-10. All right, everybody's got something different there. What we're looking for here is a 1-to-1 risk reward ratio. So if I'm going to risk 40, I want to be able to make 40. So how do I know when to get out of this? Well, I'm going to get out of this when I'm up the amount that I've risked total on both sides there. Okay, does that make sense? That way I'm keeping a 1-to-1 risk reward ratio. Okay, so that's the 220 expiration. Here's another 220 expiration going in, volume exceeding like crazy right here. Sold for 75, bought for 26. Bam, market shot down. Up 69 bucks on that side, minus the 26 I lost here, so up 40 something bucks. Okay, all right. Again, what we're talking about here is not flat days with no volume. We're talking about volatile days up and down with volume, but as you see, it's choppy up and down. So you know the market's moving, you're just not sure which way it's going to go, so you're getting low risk on each side. Okay, hoping to potentially take advantage of it moving one of those directions, just like in the examples we showed you here, every 20 minutes. Okay. Chris asked, just before you trade, are you able to look at the chart? Yes, because what's going on here is I'm looking here at the chart, and I can't obviously scroll back to the left to show you, but I'm looking at the last couple periods. Again, remember these squares are a 20-minute period. All right, sometimes there's more movement than others. So I'm looking back at the last couple of 20-minute periods going, okay, I see the market has been zigzagging up and down the last couple of periods. I see we're breaking expected volume like crazy the last couple of periods. So I'm going into this period, still seeing some volume, still seeing some up and down. I'm expecting this 20 minutes will be the same way, that it will be popping up and down. So I'm going to go into this 20-minute period here, selling one up, buying one up here and selling one up here. And what happened? Boom, it went down and we were profitable on our sell side. Okay, now what happened during that 20-minute period? Boom, market was volatile, and look, all this exceeded crazy volume. So when I go into the next 20-minute period here, I'm going to think, well, probably going to keep going. So what, obviously I don't have a screenshot of this one, but what would happen if we started right here and I sold down here and bought up here? Well, boom, market went crazy up there. So if I could have bought something here for 15 or 20 bucks, market popped up there, it would have been profitable like this one as well. Okay, so we show us how to get out early if we have profit and don't want to hold to expiration. Yes, Tim, I'll show you that. Let me just finish up this one section here. So we went through everything from, I think it was what, 120, 142, 220. This was at 240. Volume was going crazy on all four of the indices. So right here you can see the US 500, small cap, tech, and Wall Street. Here risk like $9, $10, $9. All these are like $9, $10 risks on each side. And you see, like, I held these a little longer, and the market moving fast, up 82, up 83, up 84. So again, going into this one, we're looking for high volume, lots of movement in the market. We're doing out of the money, low risk. We're risking 10 to 20 bucks on each side, hoping that potentially the market will go up to one of those and be profitable. You did all those at the same time, Eric asked. Yes. Okay, you see here? See the 240 PMs? These are all 240s. Like if you look here on the screen, all the examples we went through, okay? This was for, right here, 120 expiration, 140 expiration. I believe I missed the 2 o'clock expiration, so then here's 220 expiration. There's another 220, and these are all 240. So yes, you can do these because every 20 minutes these are on all four of the US indices during the daytime. Okay, so if you've got all four indice charts open in front of you and you see that there's just crazy volume and volatility going on all four market, I mean, you can trade as many of these as you want, one of them or all four of them. Okay, are the pricing the same at market open, Jonathan? No. Pricing is like as soon as the next 20-minute period opens up, the pricing of the strike prices are determined right before that. So if the market's moving like crazy, from the time, I don't remember what it is, I think it's 1 minute or 30 seconds that the strike prices are determined, the market can move like crazy. So you might go in and there might be certain periods where you don't have binaries. Like, okay, see this example right here. See the market's coming down, 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 down. Well, right here before this new 20-minute period starts, the strike prices will be set for this next period. But if the market's moving like crazy and gone down a few points, like when this new period opens up, the market might have already moved so fast that a lot of the prices have changed. Like you won't always, every single 20-minute period, you won't always be able to find stuff priced this way. You may not find $10, $15 prices. It might have moved and you can only get a $15 on one side and maybe a $30 on the other. So you may say, let me just wait. If the market's going crazy fast, you sometimes might not get $10 risks on each side. You might have to do more like $25 risks on each side, like I've got here. Okay. So is this better in the afternoon then? Not necessarily, Jonathan. These were just happened to be some of the screenshots. It can be on volatile days, good in the afternoon. But remember earlier we also showed kind of that lunchtime low chop. Like sometimes lunchtimes can be flat. I mean, you bring up a good question. It's not about the time of the day so much as it is reading the market conditions. And what I mean by that is this might be in the morning, it might be at lunchtime, or it might be in 2, 3 in the afternoon. But what you're looking for with our system here is, do I see this up and down chop going on while I'm also seeing this expected volume breaking through? That might be happening at 10 a.m., it might be at 12:30 lunchtime, or it might be in the mid-afternoon. So it's not so much time-based as it is, what is the market doing right now? What has it done the last couple 20-minute periods? Am I seeing this up and down the last couple periods with crazy volume? Then I want to hop in on that. It's not so much about time of day. Okay. Yes, Diego, the 20-minute binaries are only on the 4 U.S. indices, and they're offered during the daytime. The earliest you can enter one is 9:40 Eastern time in the morning, and they go until 4 p.m. in the afternoon. Okay, so they're not on Forex. No, the 20-minute, Jerry, the 20-minute binaries don't just start at noon. They go from 9:40 to 4 p.m. Yep, Jonathan, that's something you could do. What about right after or right before a major news event? That is a time that we also will look at doing strangles. There's You can do straddles and iron condors. There's a bunch of different things that we do for news. In fact, if you hop over to the apexinvesting.com website that I showed you earlier, right here there's a tab that says News and says News Trading Plan. Okay, and this will give you a calendar of, for example, this week. Okay, now this is not all of the news going on. This is just the main news that should have a little bit higher probability of having an impact on the markets and the markets that are on Nadex. And we'll show you on here a calendar of what news it is. Some of it we just say, hey, this is going on, be aware, there might be some movement. Some of it will show you, hey, we recommend doing what we're going to do is an iron condor on this. We're looking to enter an iron condor at this time with this expiration for a minimum of this profit. If you're wondering what an iron condor is, you can scroll down here, and we've got several videos on how to trade news events, how to trade the weekly oil inventory reports, step-by-step iron condors with Nadex spreads. But yes, strangles are something we do at times use for news as well, because a lot of times news is coming out, it can move the market, but you don't know what way it's going to move the market. You don't know if it's going to go up, you don't know if it's going to go down, right? So iron condors can be a great way to take advantage of that as well. Let me just catch up on a couple questions here, and I know we're kind of running over here. Yeah, Rum, it all depends on the volatility there. Yes, Claudia, there's a chart for each different strategy. Yep. Although those two we just looked at, most of the butterflies and the strangles, we pretty much use the same chart and indicators for the most part, because we're looking at, is it staying in between those ranges, and do we have volume? So it's mainly the ranges and volumes that we're really looking at there. Okay. Let's see here. Everett, the information I just covered there, Everett says, are there fees for the Apex information such as the news feeds? No. You can go right on there as a free member and have access to that news calendar. Okay. Yeah, it's available for you. You can go make a free username and password and go right to it. Like I said, if you go here to the Apex website, create a username and password, everything on the news calendar is free. All of those videos of iron condors and how to use them for news are free. All of this education under here, literally too much, like literally hundreds of hours of education on Nadex binaries, Nadex spreads, how to use them, how to trade them, all kind of information. Okay. And you can go here to one of either these two tabs here to get information on some trials to take advantage of some of these indicators that you are asking about here. Okay. Yeah, Claudia, if you just ask over here in the question section, right here, you can get to the help desk. You can submit a ticket asking about that. Okay. Or here on the online chat. All right. Alan, that would be a no. I'm sorry. Let's see here. What can I do? All right, guys, let me just cover this next section real quick here so we can finish up, and then I'll come back and knock out a few of these questions. I think some of them will be answered here on this next section, and otherwise I will come back to it. Okay, remember how we were looking here at the price ladder this is on the 20-minute binaries. Here's an example of the U.S. Small Caps 2000. Okay, the mini Russell. Here's the different strikes listed. What I want you to notice here, okay, is 1255.1, 1255.4, 1254.4, 1253.7. Notice this is in the afternoon when these are only 0.7 ticks apart. 7 ticks apart, less than 1 point. Okay? Look at the price difference here. From $17 here to $76 here, and it's only 2 points. What I'm trying to explain here, guys, is what we're going to talk about now is just real quick covering directional trading on the 20-minute binaries. All right, the nice thing about the 20-minute binaries, they're very short term. You can normally get quick in and out trades, but they can be very volatile. They can move fast. All right, and that's a great thing because the price can move very fast. I mean, look at the difference here. Just in 2 points, a difference of $17 and $76. Okay, so it doesn't take a whole lot to be profitable potentially on the 20-minute binaries. Okay, Dave, I'll see your question there. I'll answer that here in just a second. Guys, let me get through this and I'll catch up on your questions. Not putting you off here, just let me get through the end here, then we can go back over the questions, because I know some people have to go. So with the 20-minute binaries, let's take a look here. Remember we talked about some lunchtime chop here, but what I want to show you is, let's just look here. Again, we've got our boxes again. Now let's look at this particular box right here. So this bar here was about at 2063, say, right? Where was it by the end of this? It was up at 2070. All right? How many points is that? That's like 7, right? Look at this here. So about 2070 up to 2075. When the market's moving, it's not too hard to get a few points pretty quickly, right? Let's take a look here on the on NQ. Look here. Start off at what? About 43.68. Boom, way up here to 43.75. Then all the way back down here. The market can move pretty quickly and give you a few points pretty quick, right? So look at this example again. So just a few ticks. Now I'm showing you a few different charts here. On just a few ticks, you can get a pretty good difference in value there, can't you? Okay. So with trend trading, I mentioned this earlier, with pretty much every binary strategy that we teach at Apex, we don't have any strategies where we teach you to hold until expiration. Okay, I even talked about earlier, like with the strangles, don't hold them. You're going for a certain amount of profit and get out. So what have we talked about so far? 3 different market conditions. Range bound, where it's flat. Volatile, where it's moving up and down, you're just not sure which way it's going. Now we want to talk about directional, when you can say, hey, there's clearly a trend in the market right now. So there's different ways to trade them. Remember, range bound, we're going on each side, want it to expire in the middle. Breakout, we're going out of the money on both sides, want it to move one way or the other. On directional trading, we're not buying and selling. We're not going 2 different directions. We're directional trading. We're only going one way. We're either buying or selling. And what we're looking to do is to scalp it. Okay? Not getting in and holding it to expiration and buying something for 80 bucks and risking 80 bucks to maybe make 20. We're not looking to do that. We're looking to do an out of the money contract or maybe a at the money contract. And what do I mean by that? Well, I'm saying maybe we're looking to go for a $17 or $33 risk, let's say, and we're looking to hop in, make 20 bucks and get out. Okay? We're not looking to buy for 76 bucks and maybe lose all 76 bucks or maybe make, 24 bucks. We're looking to scalp this because, again, what happens? How much does it really take? How much movement does it really take to make a difference in $20 of value here? Only just a couple of points, or a few points sometimes, right? A few strikes, I mean. You got to just go through a few strikes here. So let's take a look at this again here. All right, so very similar chart to what we've seen earlier, but you also see something different on here. You see these arrows. See this green arrow? What do you think green means? Buy. What do you think red means? Sell. Pretty hard to learn that one, huh? Pretty simple. Okay, so what we're looking for with trend trading, all right, is we're looking to, this is what we call our trend catcher indicator. All right, our trend catcher indicator gives us the immediate trend of the market. Okay, it's not the long-term, weekly, daily, and end of day. It's the immediate trend of the market, and we use this for trading 5-minute binaries and for trading 20-minute binaries. And what we're looking for is we're looking for expected, higher than expected volume in a trending market with our trend catcher. So for example, look at this right here. This square here starts at 9:40 and it expires at 10 o'clock. That's the very first 20-minute binary contract you can get into with Nadex in the morning, right? So what am I seeing here? All right, 9:40 is the first one I can get into from the day. And this was from this morning, by the way, guys. Okay, I took these shots earlier this morning to show you this. Well, am I seeing in the previous 20-minute period, am I seeing some volume breakout here? Yeah, seeing some good volume. I like that. But am I seeing chop up and down? Or am I seeing directional? Am I seeing our trend catcher say long, green, and I see directional? So going into this next 20-minute period, right before it starts, I'm still seeing directional and I'm still seeing volume. Volume is the big key here for directional trading because you want some indication that it's still going that direction. So what happens if I were to get into this right here? So as soon as it opens, I'm not doing like we did before and buying and selling because I don't know what way it's going to go. I'm wanting it to keep going that direction. So let's say I hop in right here and say I buy a $20, $25 binary. And I'm wanting it to come up here and it's going up to only, again, remember, it only takes a few points. And as soon as I'm up $20 in profit, I'm out. I'm scalping it. Okay, I'm in and out. I'm not holding it to expiration. I'm not waiting to see if it happens to go against me. The big key here is in and out 20 bucks. Boom. In and out 20 bucks. Boom. I mean, you've got opportunities every 20 minutes on 4 different instruments. And I'm talking about one contract. I mean, what if I did 10 of them? What if I bought 10 of them at $25? Well, as soon as I'm up 20 bucks, I got a lot of them. Well, I'm up 200 bucks. What if I did 20 contracts, 5 contracts, right? You can do as many contracts there. What we're looking here for is the direction of the trend catcher, showing us to go long or short with expected volume. Okay, now we have some information on our website that would get into this a lot more in depth, explain each one of these indicators, how to use them, what to look for. I'm giving you a basic overview here to give you an idea of how we look at trend trading the 20-minute binaries. Okay, here's another example. All right, this is also from today. And let's look here. So first part of the day, what do I see here? I'm seeing higher than expected volume. Boom, 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 right? And then what happens? I get a short on our trend catcher. And what happened? Goes down. Right? So if I got in there and all I'm looking to do is get $20, scalp 20 bucks off it, get out. Right? Now, here it goes long. So I could go back the other way. But would I have done that? Probably not. And you know why? Because look, volume is high, right? It's breaking through, and then what happens? It starts to come down. So I'm probably not going to take the other direction. If volume was high, but then it's starting to come down, probably not going to go that other direction until I see volume really picking up again. Okay, and I'm not looking for volume to like just hit that yellow line or just barely break it. I'm looking for it to really break it. So I might stay out of this. But then what happens here? We get a long to go to buy on our trend catcher. Now, had we gotten in right here, we'd have won right there, right? We could have scalped that for 20 bucks easy. But honestly, I probably would not have gotten in there because see, volume's still just not quite doing it for me here. But what happens as I'm into this long trade? What happens? Volume starts to break it, right? Not just break it a little, it's breaking it more. And what's it doing? And it's building, right? So volume's going, bam. We get a signal to go the other way, I'm taking it because I know that volume's beefing up there. And now it's saying that it's going down. So what happened? Pop in there, scalp it all the way down, right? Volume's still going. Okay, I know I'm giving you a very quick run through here, but volume is very, very important. Volume is what we base this on. Can you guys see that difference right there? Where volume was bigger over here, that's why I got into this trade, got it. But it started slowing down. So I kind of stayed out of it till I saw it picking up. Okay, it's picking up, and then look, I get a directional that way, go with it. Alright, let's look at another quick example here. Trend trading. Again, this is today. What do we see here? It's volumes breaking our yellow line like crazy, right? And we're in a long, see this green line? We're in a long trend catcher. So I'm hopping in here and boom, 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 scalping for 20 bucks. The next 20-minute period, still got a long trend catcher, volume still going, scalp that one for 20 bucks. What happens here? You see that? Volume's crazy, and volume goes down. And I'm glad I paid attention to volume. You know why? Because look at this 20-minute period here. Went up a little, down a little, it chopped, right? Not really much going on there. So I'm sure glad I stayed out of that one. I'm sure glad I did not try to trend trade that one and scalp it because not much went on. You guys see how volume is so important here? Yes, I'll show you where you can get some of this stuff here, okay? That's how we use volume and why we use it. And I kind of call this the volume valley. Let's take a look here. So again, to the left of the screen, you would have seen volume going crazy. It's going crazy. Still crazy right here, right? Breaking out of there. So I took this short trade. Bam, 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 bam. Several points there. Easy scalp. Boom. But what's happening? This volume, see right here, it's stepping up, up, up. Now what's it doing? Down, 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 down. You see that? You can kind of see the energy coming out of it, right? The air is deflating from the volume balloon there, right? So I'm probably not going to take these here. I'm going to stay out of all that. But then what starts to stair step here? Boom, boom, boom. So on this long here, again, that long probably would have won. But I probably wouldn't have taken it because I'm seeing volume kind of slow down. But in the middle of this run, again, remember, it's picking up, picking up. So I'm taking this one, boom. And I'm taking this one, boom. See, it starts to slow down here, then pick back up. All right? So that is how we, in a nutshell, do trend trading on the 20-minute binaries. Okay? And yes, at the end here, a lot of y'all are asking, I'll show you where to go on the website to get some more information about this. But I know this was a long webinar. I know I went over a lot of things. But what I want you to see here at the end, now that we've put it all together, is I showed you 3 different ways to trade market conditions, right? We had flat range bound, where it's just not moving, it's dead. It's just flatlined. So what do? We buy one below and sell one above in hopes that it stays flat and we win on both. Cool. Then we've got choppy, volatile days where it's just up, down, up, down. How do we take advantage of that? Well, potentially we buy and sell and out of the money on both sides, hoping that when it reaches up there to the peak, bam, we get out of that one side, make a 1-to-1 risk-reward ratio. All right, what's the other market daily market condition? A trending day, which we showed you right here. How do we see that trend? We're looking at volume and looking at this trend catcher. We're looking to get in and out and scalp it. Okay? So like we talked about in the beginning, we always talk about, and I know you've heard this a million times, and those of you that have been on this webinar before are like, okay, heard it before. You can't win a football game if you only got one play in your book. You're not going to win a football game if you run a Hail Mary every single time, right? For if you're a golfer, you've got your drivers and your putters and your wedges. You got to have different clubs in your bag because each day in the market can be different. Trending day, volatile day, flat day, or even different times of the day. And you've got to read the chart, you've got to read the market to know what strategy you have to use for that particular time. Okay? Let's see here. Like I said, next week we are going to have the whole webinar will be choosing the right binary for your strategy. Out of the money, out the money, in the money, time decay, premium, expected moves of the market. It's very key. I know some of y'all say, I don't need that. I understand what that is. Well, now at the end of this, you might understand more why I covered it so much, and we're going to cover it again because different market conditions that day will determine a different strategy or system you should use, and each one of those strategies requires a different type of binary. If you choose the wrong binary for that strategy, it's not going to work out for you. Okay? So it's very important to understand that. Let's see here. William, I appreciate that. Let me jump through a couple questions here real quick, and then we'll let you run. I think most of the questions, let me just give me a second to catch up here. Yeah, Claudia, like I said, asked that on the chat there. Yes, Kevin, information overload. Okay. Most of your questions here are about the Apex website. Again, if you go to apexinvesting.com, sign up for a free username and password. That'll give you we have a free membership to the site itself that will give you free access to, like we just said, the news trading plans, our entire forum that covers all of our strategies, systems, questions and answers, all kind of stuff there. You can go here to the step-by-step courses. We have literally step-by-step courses of how to trade 5-minute binaries, trend trading, spread, I mean everything. Okay. Over here under education, right here, go to education under Nadex tutorials. If you go right here to Nadex binaries under the tutorial section, this is a collection of a bunch of different webinars on Nadex binaries. Okay, everything from trading binary options, top mistakes to avoid. You know, what are options? Why Nadex? How to use the price ladder, out of the money strategies versus in the money strategies, swing premium collection. I mean, this is all free for you to watch. Okay, all of the education on the Apex website is free. Yes, some memberships are required to utilize some of our systems and indicators, and some of these indicators you've seen on the charts. But all the education of how to use them, that way you can learn and know the system ahead of time, watch exactly what we do and how we do it, to know if it's something you want to check out or not. You can hop on here. There's trials that you can check them out for a few weeks, okay, and demo trade with them, get to learn them. All right. Under the questions tab right here, go to Trading Questions Forum, and a couple of y'all are asking where will this webinar be. Under the General Trading Forum right here, newest webinars. That's where this will be here. Okay. Let's see here. Just making sure we got all the other questions. Yeah, just check out the site. Let's Let's see here. Market. Expected indicator. Yes, the expected volume indicator is one of the indicators with the memberships. Yes, but like I said, there's some trials on there. Check it out. That volume is very important. It's the biggest thing we use. So, but we'll show you how to get all the charting system and data feeds and all that for free. That's all on there. Okay. Claudia, I probably will be next week. I believe so. Let's see here. Yep, Alan. Yeah, just Windows there. Okay, if I missed, we got a bunch of questions there. If I missed a question, go ahead and pop it in there for me real quick. Otherwise, I'm going to be shutting us down here pretty quickly. I know we went over, way over, but good stuff there. Some good questions and good feedback. If I missed something, pop it in there real quick. Otherwise, we'll have this video recording up for you later tonight or tomorrow. Do you recommend taking a trade in the middle of a 20-minute expiration? Yeah, I have no problem with that. I might not take it in the last 2 minutes, obviously, before expiration, because there's not a whole lot of time left there. It depends on what strategy or system I'm doing. But I mean, you can see here on, like on this example here that we were just talking about with trend trading. The 20-minute period started here, ended here. But you can see it went up the whole time. Or here went up the whole time. As long as I have everything lining up for me, if my trend catcher is pointing that direction and I'm getting some good volume there, it can be in the middle of a 20-minute period. I mean, see right here, see this square? That's the start of the 20-minute period. Remember I said this long, I probably wouldn't have taken that because of this volume. But see, it started to build, so when I got this short signal, I had good volume. I would have taken that. That was in the middle of a 20-minute period. So yeah, I have no problem at all taking something in the middle of the period like that. So, let's see here. Yeah, Ray, go ahead. Ray, give Nadex a call. They should be able to do that for you. You can just give them a call over the phone. They should be able to take care of that for you. Let's see here. Yep, Diego, we have a couple of different trading rooms on the Apex website as a member or even as a trial member. A couple of you are asking about, how can I get access to some of this? We'll show you how to get the charting system and all the data for free. Like I said, it does require membership to get all of these indicators, but go on there and look. There's a trial. I think it's like $7. You can try it out for like a few weeks. Okay, I mean it's not a big deal. That way you can try it out and see how it works for you. That also gets you access to the trading rooms. We've got a futures trading room where we got futures and Forex traders. Then we have a Nadex trading room where all that's going on in there is people trading Nadex. 5-minute binaries, 20-minute binary spread. It's all about Nadex. Other traders sharing their trades. Other traders posting their trades. You can follow trades that other traders post. You can follow their charts. You can post charts and ask questions. It's a great room. There's people in there all day. There's people in there at nighttime trading the 5-minute binaries at night. It's a great community. Apex is all about a community of traders helping traders. It's not a follow the guru, do what one person tells you to do. It's not do what Daryl Martin tells you to do or do what John tells you to do and follow their trades. We are about teaching you exactly how we do this so that you can do it. Don't follow the guru, become a guru. Don't wait on someone else to give you a signal. Learn how to read the chart, read the market conditions, and take it yourself. Yes, we're there. We have room leaders. We have a bunch of traders in there helping and calling out other trades. So yes, that community is there, but it's about teaching you to be able to do it. That way you can do it anytime on your own. Okay? In order to get out of a binary when you buy one is to sell one. Correct, Michael. If you buy a binary, to get out of it, you either have to hold it to expiration and it'll automatically close out, or you just have to simply sell it. All right. So if you were going in, let's see here, 9 o'clock. This is my demo account. If I was to buy this binary right here, Okay, so I bought that binary. All right, it's in my open orders right here. You see, I got it for $23.25. You can tell it's a buy because it's +1. If I sold it, it'd say -1. Okay, so I bought that binary. If I want to get out of it early, now maybe I want to get out of it early because I'm up 20 bucks and I'm scalping it and I want to get out early and take my 20. Or maybe I'm getting out of it early because I was wrong, it's going the other way, and I don't want to lose the whole amount, I want to get out. All you have to do is, if there's an open order here and you bought it, you simply just click it and it pulls up the ticket. And look, the sell side is already highlighted with one contract, right? Because you bought it. If you're opening this order to exit it, it knows that you're wanting to exit it and sell. So if that's already filled out, you sell it, and oh, hold on. All right, so you open it, and I'm selling it, and I get out, and the order's closed. See that? So yes, to buy one, to get out of it, you sell the one you bought. Or if you sell one, to get out of it, you buy it back. Okay? Let's see here. For the 20-minute binary trade, in the money, at the money. Let's see here. Veronica, you're saying for the 20-minute binary trade, in the money, at the money. Well, keep in mind, we just covered three different strategies. Okay? The first one, the butterfly, that's where it's a flat market. We're buying and selling in the monies. Okay? And we're hoping the market doesn't move and expires in the middle. Second one we covered was strangles, where it's a volatile day, lots of volume, the market's going up and down. And we're going to buy and sell and out of the money. All right, looking for the market to be volatile and go up and hit one of those and be profitable. The last one that we covered was the trend trading, okay, where we're looking for volume and we're looking for the direction of the trend catcher. Those we're doing either out of the monies or even at the monies. You can do in the monies if you want, but we're looking for a quick $20 scalp and get out. All right, so I would say more of a out of the money or at the money. How are the 20-minute binaries different from the 5-minute binaries? David, first of all, the biggest difference is this. The 20-minute binaries are only offered on the 4 U.S. indices during the daytime. Okay? There's not 5-minute binaries on the indices. The 5-minute binaries are offered on 4 different FX pairs, Forex pairs, and they're offered 23 hours a day. Okay, the only time you can't trade them is from 5 p.m. to 6 p.m. Eastern time. Okay, so that's the biggest difference, is they're different instruments, and the 5-minute binaries are 23 hours a day. 20-minute binaries are just during the day on the indices. From there, there's differences in, obviously, 20-minute expiration versus 5-minute expiration. So the 5-minute binaries can move a lot faster. Okay, meaning since there's less time to expiration, there's less time for that thing to get to either being worth 0 or 100. So especially when you get closer to expiration, just a small little quick move in the market on the 5-minute binaries can pop that thing up 20, 30, 40 bucks. They're a little more volatile, they're a little faster. Some people don't like them because they're a little faster. Most people love them because they're faster, because you've got a potential new trade every 5 minutes and just boom, 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 and knock them out. Okay, so Everett, thank you, appreciate that. Yes, we can go over take profit orders next time as well, absolutely. Yep, Jerry, you can use them for the intraday and pretty much any binaries there. Yes, Alan, in the here under the education tab, if you remember a second ago where I showed go to education, Nadex tutorials, right here. Oh, well, I lost it. Education, Nadex tutorial. What am I doing? Education, Nadex tutorials, right there. Nadex platform tutorials. That's where you can find what you're looking for. Okay. Let's see here. Alan, yeah, that's what you're looking for there. Yes, this is being recorded, and it will be posted right here under questions, trading question forum. Okay. Right there on the tutorials as well, we'll show you how to do those take order Vita as far as those take profit and take profits. Be covered right there as well. So, okay, guys, let me go ahead and let's see. I got another question. Fill in with 20-minute binaries. David asked a question: if you're trading 5-minute binaries, is there usually a need to fill in with 20-minute binaries? You know, that's a personal preference, David. Like I said, some people, most people love the 5-minute binaries because they're so fast. You got a new opportunity every 5 minutes. Just a quick move in the market can get you a good, quick scalp. Okay. For some people, you know, it's a little too fast for them, and they prefer the 20-minute binaries just because they got a little more time there. It's a little more laid back. Okay. That's a personal preference. What you got to be careful for is to not be watching too many markets. You know, if you're trying to watch those 4FX pairs to trade the 5-minute binaries, that's already kind of a lot to watch. To watch all 4 of them, and you making sure you're following the rules on all 4 of them, and watching for volume all 4 of them, entering orders and getting your take profits and exits. You know, they can be fast every 5 minutes. You go on, you add a whole other 4 other charts on all 4 of the US indices, trying to watch those 2, you might get to a point where you're just watching too much stuff. You might just be watching too many charts, and you'll find that you're starting to miss trades. You know, and some of these systems and some of these charts have audio alerts. You know, that'll say pending long on this and pending, and you're mixing up. You got too many charts in front of you. It's just confusing you. You know what I mean? So that's the best thing I can say is, you know, now let's say you're watching the 5-minute binaries and they're just dead. They're just slow. There's no news that day. There's nothing going on. FX is just not moving. Man, you know, you might want to then pop over and look at some 20-minute binaries. You know, there's a lot of times where commodities are not moving today and stocks, indices are kind of slow, but man, FX is taking off. Or, you know, FX isn't doing anything, but the markets are. You know, that's why it's good to watch some different things there. So, you know, if you're seeing that one of them is just not moving and nothing going on, you know, you could check out the other instruments. Maybe that's where you'll get some good action. Okay? Because not everything moves every day the same way. Or, you know, a choppy day on Forex might be a trending day on the 20-minute binaries on the indices. Okay? So check them out. You can always keep that in mind there. So, Eric, you're very welcome. Glad you enjoyed it. Okay, guys, I really appreciate you being on with us here. I know we went way over, but I hope it was some good stuff. Hope you enjoyed it. We do these every Monday night at 7 p.m. Eastern Time. So join us this next coming Monday night for our next Nadex educational webinar. And we wish all of you and your families a very happy Easter holiday weekend this weekend. Hopefully some of you or a lot of you have off on Good Friday and can enjoy a long weekend with the family. And then we will catch up with you on Monday. Kenny, go ahead. You have a quick question. Go for it. Kenny, I will have that up here in just a little bit. Yes, I will. Okay, guys, I'm going to go ahead and shut it down for the night. We appreciate you being on here. Everybody have a good evening. We'll talk to you next week. Happy holidays to you as well. Thank you, Jerry. Appreciate it.